So switching back to a little bit more finance, a little fun on the entrepreneurial side, and those challenges, they're very real, especially the sales one. I think everybody goes through that. I know I've dealt with some of those issues as well. You mentioned this earlier, and I'd love to dig into it a little bit more, that you have a 5-part framework you use. And you talked about that for helping build out the finance function. So can we go through those? Maybe just kind of walk through each of those again, kind of step by step, and we'll talk a little bit about that.
Yeah, so I like to equate this 5-part framework into a financially healthy house. And if you're imagining the house, before you start building the house, what do you need to have? You need to have the foundation. So that is really your bookkeeping and accounting. That's all the data that comes in. And when you're building this financial structure from scratch, you need to make sure that the bookkeeping and accounting is done correctly. And in smaller businesses, that can be anything. So we really immediately have to make sure that the month-end close is done, that the data is done correctly, that we actually have good software that can support all of this. So that is the foundation of this house.
And I'm curious, how often when you come in is the foundation have cracks and falling apart? Or when you first get there, do you usually find outside of maybe they're on cash basis instead of accrual, that the accounting's pretty decent? Or what does it typically look like when you get in there?
It's typically a challenge. And typically it's also on the cash basis versus accrual basis. And I would say there's level of accrual. So, which is interesting because if you're comparing that to, for example, Fortune 500 companies, when you have, you're being audited and you have to really figure out that the accrual is done by actual GAAP and all of that. In smaller businesses, because you're not a publicly traded company, you can be a little bit more looser. So what I mean by that is, for example, if you are buying a software for the next 2 years, you might see it if it's let's say $5,000 or $10,000, you might actually expense it versus amortize it over in the next couple of years. So that's what I mean. So there's thing called I would call it more like an adjusted accrual. It's not really truly 100% there, but the things that really matter need to be on an accrual basis. Like, for example, in an example that I put the remodeling business, one of the things what the remodeling construction really has is they have such a thing called the work in progress reporting.
Yep.
If you don't do those adjustments, the financials profit and loss statement is going to be really off, because in that particular industry, you're taking a lot of cash up front, but the cost is coming down later. So what it looks like is that you have so much profit in, let's say, this month, but when the cost comes a couple of months later, you're going to be in a huge loss. So the gross profit, it just becomes really wonky and you have no idea what's happening. So that is what I mean by actually doing those accruals. And in this particular scenario, doing the work in progress reporting. So with that client, they didn't have that. We had to do that.
Yeah, that makes a lot of sense, that you have to have enough there to normalize it so you can get a good trend and understand what's going on. And in some businesses, it's on a cash basis. You just don't have that at all. Yeah. Oh, we made 50,000 this month. Oh, we lost 30,000 this month. And it's up and down. You're looking at it overall going, okay, there's a decent amount of money here, but how do I match it all and understand what's generating that revenue against what expenses to say, oh yeah, that seems like a proper margin, or you're way out of whack here.
Yep. And if you don't have that, then it's really hard to do any sort of good financial analysis or any good financial planning, because it's like, I have no idea what's going to happen, like when the cash is going to go. So it's really, really important to have that. Also, on another side, it has real tax implications as well.
Sure. As I've always said, an FP&A person's best friend is a good accountant.
Yep.
Because we've all been there. You're closing the books and you're looking and you're calling the account. This doesn't look right. There's no way this is all the revenue. I know this and this and this was supposed to come in this month. And those are the worst, and they have no idea. Versus, oh yeah, no, we're booking those entries now. We were waiting for some data, whatever it might be. And you have confidence in what's going on in the books. It makes a huge difference. And so that's step one. What was the second one?
So the second one is, now that you have all this data coming in, you also have to use it in a way that is useful to your business. And that is the financial analysis. So now we have the foundation of the house. Financial analysis are the walls of this particular house. The what's really also important is the stuff that you have to process all this data. So all the financial systems and processes that you have, you might, and we also alluded to that with this particular client, everything was in different buckets. So we had to centralize this data. We had to have this central repository, because if you have a central repository of data, it is so much easier to do any analysis, to do any projections with it. Like, for example, one of the things that I always say for the businesses is they need to have a CRM. We need to have a CRM, because if we have a CRM, then we can go and figure out how the pipeline looks like. I always like to look at the pipeline before I do any sales projections. If you're just doing, well, we're going to be at 5% more than what we are this month, it's like, is it really going to be true? I don't know. Let me look at the pipeline. What is actually happening in the pipeline? So
let me get some confidence around that number.
Yes, and I love to see the confidence. So, for example, if I have a $100,000 deal come through and the confidence is less than 50%, I'm like, well, I might opt to just not have that in my forecast. But if it's something at 80% more, we're definitely going to put that in, adjust it, obviously. So that's what I mean by financial systems and processes. And, it has to make sense for the business. And that is kind of like the internal design of this particular house. And the way that, you would not put a bathtub in the middle of the kitchen, because that doesn't make any sense. Again, the systems and the processes that you have to make sense for that particular business and the industry that this business is in. And the fourth piece is the financial planning and strategy. So that's the roof of the house. And that is something that is protecting everything that is below, obviously. And that I would put FP&A in there. But as you have noticed, like, for us to get to the roof of the house, we needed to build all the other things, because if we just jump into the FP&A, it's going to be garbage in, garbage out.
Yeah. You can't make something great when there's nothing there to make something from. If you can't find good trends, you can't do analysis. You can't work miracles with garbage.
Yeah, exactly. Which is why it bothers me when there are FP&A tools or forecasting or cash forecasting tools for smaller businesses, because if the software is telling you a specific number, it doesn't mean that it's going to be true, because that particular number is based on the assumptions that you're building in. And usually it's for the historical data. And if your accounting is not up to par, this is going to muddle the waters for the planning. And also, the other thing too is that whatever planning tool you're using, they will not know what is happening in your operational data, what is happening in your sales pipeline. So just using the historical information to try to extrapolate things, yes, it's a good basis, but you need to know what is happening in the business to really be able to truly forecast up in the future.
Yep, makes sense. I would agree with you. Is the planning tools are maybe planning off your data. If your data isn't good, for a small business, it doesn't do any good. And often, until somebody's come in and help look at the data, there are exceptions. There are some that from day one, maybe, especially those that have finance experience or bookkeeping or whatever, accounting, may have better numbers, but many have no idea. They didn't get into business to deal with finance. So what was the last one you mentioned? Financial planning and strategy. What's the fifth one?
So the last one is the alarm of the house, and that is the internal controls. And that is something that is truly, truly missing in the smaller businesses. And we all know how important that is. And I have had clients that have been stolen from, they're either by their employees or by their bookkeeper, and people didn't know. And the only reason when people start really paying attention to this is if something has happened. So I want to be very proactive with that we're putting internal controls in place. And it doesn't have to be anything, completely complicated. It's like a simple thing, like no one should be paying and writing a check and then reconciling something. I mean, these are 3 different touch points that you really need to have at least 2 people taking care of. I mean, simple things like this, like, getting a list of all your vendors every couple of months and looking at, are these vendors legitimate? Do I know what they are for? If anything looks like it's duplicated, start looking at it and start questioning, why is this vendor similar name to the other name? There's someone maybe like create a fictitious vendor. I mean, that has happened too. So things like that really make an impact, and they're proactively safeguarding the assets of the company.
separation of duties, those basic things that are not hard to implement, but protect you. Not asking for, big, huge accounting memo for every little tiny thing you do, like you sometimes have to do in big companies where, the rules themselves are almost too much to read.
Yeah, exactly. And the other thing too, if there are any adjusting entries that are happening, there needs to be a support for it. I will tell you how many times I go into someone's financial records and their accountant made like a $200,000 entry into equity and there's no support behind it. I'm like, what was this for?
I can totally believe it. I mean, yeah, that doesn't surprise me at all.
And with things you can, because people, especially in smaller businesses, people understand profit and loss statement. You have revenue, income, and profit. But balance sheet is a tough one. And for someone who knows how to hide things, you can easily hide things on the balance sheet and people will not, like the business owner just wouldn't see it.